All right, going to be taking a look at Netflix, stock ticker symbol NFLX. Somebody brought this up over here on Investors Hangout Live, and I was like, we might as well get into this one. There is a little bit to talk about, and off of personal experience as well, I wanted to talk about this also. Now, my personal experience is that I've noticed that they've been cracking down a little bit on the multiple screens, and that wasn't really something that they were really focused on before. I read that was kind of their marketing strategy to kind of get those people out there to share their passwords and their login information, and then you would never really have too many problems. And they started rolling out the multiple screens, really didn't crack down on it, and then all of a sudden they really started to crack down on it. That's what I've personally noticed. My kids, myself, I mean, they all have Netflix on their iPads. Never really had an issue until if they're streaming, one of them's off of a hotspot, another one's off another network inside our home. They would run into that multiple screen error. We've never had that issue until around April 1st, so right around the beginning of the third or second quarter, rather. So I don't know if that was a strategy that they rolled out with or what, but I wanted to talk about it a little bit because if you look back in here, look at all this, just a big move from 2012 when you guys were down there, $6, way down there, and now all the way back up into that area. Obviously, there was a split involved as well, but up in here, 156.48 right now. Looks like you guys are going to have your support levels down here at 152.15. Right in that general area, you are going to have a support level. Off of that, you guys are going to have another one that's going to be down here about 147.47, running into that 10-day simple moving average. But again, with 4 million shares being traded so far today, big high over here on April 25th at 21 million shares. That's a lot of money, obviously, being rolled up in here, but you guys got to look at the overall thing, and I know that Joe wanted to talk about this as well, so I'm going to hand the floor to him.
All right, so their latest press release was on April 28th. It was IQIYI and Netflix signs licensing agreement. So IQIYI and Netflix have signed a content licensing agreement for a subset of Netflix original series like Stranger Things and Black Mirror. Through expectations of our deal are modest in scope, we are delighted that consumers will be able to enjoy these highly popular series on IQIYI, the leading online video platform in China. Our cooperation will be subject to relevant regulations on online streaming of important drama and film content in China. So this deal right here, it's obviously a license agreement where Netflix will be streaming their things within or on IQIYI, I guess, their original content. All right, so that IQIYI was founded in Beijing in April 2010. IQIYI is a top online video platform in China to stream both licensed and original movies, television series, variety shows, cartoons, and other content. So that right there, I mean, that's their latest news. Also on the 17th, they had their earnings. So Netflix released their first quarter 2017 financial results. So I pulled that up really quick, and it said that in Q1 we surpassed 2.5 billion in quarterly streaming revenue and added 5 million members. The opportunity provided to us by the growth of the global internet is gigantic, and our plan is to keep investing as we increase memberships, revenue, and operating margins. All right, so the quarterly guidance we provide is our internal forecast at the time we report, and we strive for accuracy. So it said, due to content, primarily House of Cards Season 5 moving from Q1 to Q2, we had higher operating margins in Q1 as forecasted at 9.7 than our plan for the year at about 7%. We forecast operating margin at 4.4% in Q2, placing us on track to reach our 7% target for the full year. The other effect of our content moves is lower net adds in Q1 compared to the prior year, as expected, and heavier net adds in Q2 compared to the prior year, about double. We have come to see these quarterly variances as mostly noise in the long-term growth trend and adoption of internet TV. The first half of this year, for example, we expect to have 8.15 million net adds compared to 8.42 million net adds in the first half of last year. International net additions decreased 22% year over year as we lapped our January 2016 launch of over 130 countries and the accompanying early surge demand in Q1 2016. Revenue for the international segment grew 62% year over year, excluding a negative 12 million impact from currency, while ASP rose 12% year over year on a FX neutral basis. Q1 was the first quarter of consolidated profit for our international segment as profit growth in our more mature territories offset investments in newer markets. Our forward guidance shows that we intend to continue to invest internationally, projecting a smaller loss for Q2. We have high satisfaction in our rapidly growing in Latin America, Europe, and North America. We are making good strides in improving our content offering to match local tastes in Asia, Middle East, and Africa, but have much more progress to make, like in Latin America a few years ago. Our year-over-year streaming revenue growth is benefiting from the price change in mid-2016 and will moderate over the course of the year to track membership growth more closely. We're seeing a small but steady migration to our 4-stream 4K UHD HDR video quality tier, which is our high-end plan that will keep revenue growth slightly above membership growth, holding FX constant. So for the last several years, we had flat operating margins due to the established markets funding international expansions with every spare dollar we had. Because of that, the major indicators of our progress were member and revenue growth in U.S. contribution margins. Starting this year, we can primarily measured by revenue growth and global operating margins as our primary metrics. The summary table above has been reorganized to reflect that while maintaining comparable to the past. So that's pretty much that. I mean, you can go through. You have to go over onto theirs. So they have it. They keep it right over there on their actual investor page on their site over on Netflix overview. So it's ir.netflix.com. You'll see it right there in that press release. So if you go over, if you're on Netflix, if you're on Investors Hangout right now, and you go to the recent news, you go right down to the April 17th. You'll see it right there, and there's a link to that board and everything else. So if you want to continue doing your due diligence, if you're on the NFLX board on Investors Hangout, you'll see the company profile, the time and sales, to recent news, the filings, to financials, to buy rating, and as always, if you have an opinion on the company, feel free to share it with the tens of thousands of like-minded investors that we have using the site daily by sharing it right over there on that board.
That's right, and all that stuff, guys. If you're following Netflix, bigger boards, all different kinds of stocks, really. Look at all this information is at your fingertips. For example, we're looking at Netflix, obviously, right now. Here's going to be all the headlines. Look at how easy this is. You just go ahead and click on the headline. It pops out right in front of you, not dragging you around. You can scroll in the background as well. So you go down to each headline one by one. Company profile, the time and sales. This is another one that you can see all the prices, the time, price, and volume. With that being said, the filings and financials that Joe also talked about is available over here. Again, all this stuff is completely free, guys. So keep that in mind. Not only for Netflix, I'm talking about every single stock that you can think of. Everything is at your fingertips. Buy rating as well. I was taking a look at that while Joe was talking about the press releases and that kind of stuff. Moderate buy right now for this one. Number of analysis reporting 30 on this one. So the average across at 30 is going to bring you up to a moderate buy. 17 of those people mark this one as a strong buy, while 2 as a moderate, 10 as a hold, and then 1 as a strong sell. All right, so I mean a very wide range. I mean, there was out of the 30, there was no moderate sells in this one as well. So you can see that. As far as the analysis reporting 3 months ago, kind of gives you guys this idea of what it's been doing current a month ago. And then 3 months ago, 3 analysis had this at a strong sell. If we take a look at the chart here, the last 3 months, I think that they were going to be a little wrong on this I mean, obviously, keep going up. Is that short term overall? I don't know exactly. Putting this together, what does that mean? Is it a strong sell for the next 5 days? Is that a strong sell for this trading day, this trading week? That is all stuff that we'd have to dig into. So we'll get back to the chart right now. Currently, right now, again, with the big board, you guys know that we follow gaps very closely, but it's much different when you get into these bigger board stocks. So it's not going to be something that's relevant when it comes down to this personally. With that being said, you guys are riding that upper Bollinger Band. Could pull back. It could pull back tomorrow to get back inside that Bollinger Band. It definitely has the history of doing that. We can see that here, not only here, but following this way back in here. So I think that right now it's getting a little bit overbought for today, rather. Possible pullback tomorrow, bring you guys back down to 144. So that would be what I would watch for with Netflix. But the overall, like I said, when we brought this one up, we were going to talk about it. I wanted to kind of keep it a wide range conversation, not only being about the stock itself, but to keep in mind of their company goals itself. But it's made obviously some huge moves. With that being said, Netflix, NFLX. If you follow the stock, make sure you hit subscribe to stay updated with this hot stock and all the other hot stocks that we look at. And if again, head over to investorshangout.com. Check out all the information we're going through, not for only Netflix, but all other stocks. If you'd like to participate in our next live show, you can do so at investorshangout.com/live.